This is Martin from Seekit, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at technical charts and try to understand what happened in the market during the previous week and also plan for a better trading week from tomorrow, July 21st, Monday, the next week. So let's deep dive into the charts. This is a quick view of how the market looks like as of now. Nifty, medium term and short term charts are what you see on the screens, and you can see that it's well within the parallel channel. And for the last week we have some corrections after a big recovery that happened earlier. We thought market is going to break out to the all-time highs once again, but it didn't happen. On the short term we can see that the breakout is clearly seen in the short term from the trendline channel, and then looks like it's falling back to the trendline channel once again. So weekly on the Banknifty charts is what you're seeing, and right side you have the daily Banknifty. So it is a very narrowing ascending wedge of the Banknifty that we're seeing in the market. And Banknifty did perform much better than Nifty for the last few months, and it did in fact hit the new all-time highs very close to the 58,000, and then for the last week it's hit the top of the ascending wedge, and then it seems to be sliding down. On the short term you see that it has hit the top of the trend line channel in the daily charts, and then it has been falling down. On Friday you see a big gap down as well. So overall market has been sliding down after a big recovery that had happened after 18% of correction earlier in the case of Nifty, and 12.5% of Banknifty. So Banknifty and Nifty both sliding down. So this is how the candlesticks looks like. A solid bearish candle weekly, almost a wide range bearish candle is what you see there. Nifty also wide range bearish candle, so definite bearishness is there, but make note that this looks like a support zone where the previous breakout had happened 3 weeks before, and that could act as a support now. Then market could take bounce or consolidate from here. Same with Bank Nifty also. So in the daily charts, if you see the last 5 days, you see that market was consolidating just like how it did the last week as well. The initial days was consolidation, then it was built down. This week it's the same, and the last 2 days is the market had given up and then slided down once again. And Friday had a camp down on the Bank Nifty also. Friday Bank Nifty's daily charts are showing that it's big gap down that happened on the Bank Nifty for some reason, and other days it was trying to move up or consolidate, or that's what was happening most of the day except for the Thursday and the Friday when it fell down. So that's the price action that you see on Nifty. The candlesticks are bearish, definitely. That's what is mentioned here, bearish overall price patterns is what it is. Basically most of the days it was consolidating and then it didn't happen. Now it's a support zone and you can bounce from here. What about the Bollinger Bands? Bollinger Bands, the Nifty is showing that it is bearish bias consolidation that continues, and Bank Nifty also bearish bias consolidation continues. So my slight expansion on the downside is just beginning to happen, but you can still consider it as bearish bias, and therefore we can say the bands are showing some predictions of more further sideways movement rather than the bearishness, unless it confirms to be expanding next week or next days. Yes. So yeah, sideways stories told by the Bollinger Bands. Now if you look at the momentum indicators with the RSI, we see that the momentum has slipped last week itself for the Nifty on the medium term or weekly charts, but as you see on the left side, and Bank Nifty is still maintaining that bullish momentum on the medium term. And right side you see that momentum on both the indices have slipped sideways. So short terms momentum has slipped down, there's no doubt about that, but Nifty somehow is managing the medium term momentum as well in the bull zones. Now ADX is what is used for the trend. The trend indicators are showing that the medium term bullishness is intact on both. It has not crossed over to the bear zones yet on the medium term weekly charts, but it remains as it was last week with medium term where short term bearishness is there. Short term bearishness is what is highlighted, and sideways movement is what we can see. So medium term things looks pretty good still. And the VIX had sharp fall last week as well. For the sharp fall, that's a 3.6% fall, and it's in the low volatility regime of 11.39. So VIX falling means there is some amount of reduction of the fear factor is what we can understand. And moving ahead, if you try to understand the open interest, futures are showing short build-up, which is bearish in nature. And for the weekly Nifty is July 24th. The details are shown here. And PCR ratio for the options II is bearish. 0.6 and 0.7 is definitely bearish on Nifty and the Banknifty also. Banknifty, ignore that it is for the monthly expiry, not for the weekly. So huge resistances on the weekly expiry is seen there, which shows the resistance is on the upside. Still we have 4 more days for the expiry to happen on the weekly. So this is the build-up as of Friday. So bearishness on the II, on the futures, on the options as well. Now if we look at how this particular II charts are showing, we can predict some amount of support resistance as of now for the Nifty and the Banknifty. We can see that the maximum support is at 24,900, where the maximum call writing is put writing is seen, and maximum call writing seems to be about 25,200 zones. So the range is between 24,900 and 25,100. So very narrow range. That's what the options that are showing in Banknifty remains to be the same for the month and even the last month mid onwards. It's the same level. 56,000 and 57,000 is where the highest put and call resistance is seen. Now another way of finding out the support resistance levels is to look at the technical charts, right? So we'll be looking at the moving averages, swing highs, swing lows, Fibonacci retracements, daily exponential moving averages, previous resistance points, and all that, right? So that's the details I mentioned here. We can have a look, make a note of that. That's from the charts. So basically, if you just try to summarize that, the first major resistance for the Nifty would come in at this particular zone, right? How to get back to the 25,000 levels. So 25,000 is lost, and that's going to be the major hurdle, is to get back, and even the 20 exponential moving average is also gone. That's 25,200. How to get back? So that's all going to be resistance upside. Then the 25,670 pricing highs, and then there's a gap that's coming here at 750. Then 850, and then 26,000 rounding number. That's resistance on the upside. Support similarly could be 100 exponential moving average. Then there's a gap. Right, so that levels are shown here. So first major support will come in at 24,932. The 50 exponential moving average is there. Then 24,527, 100 exponential moving average is there. 473, 24,2, 473 rounding. Sorry, 473 is a previous swing low. There's a correction there. I will correct it right away. And then there is a gap. That's at 24,092 and 25,000 rounding number. That's a level of support in Banknifty. Similarly, we can see that major resistance would be the all-time highs, basically 57,628. But before that, we have a 57,000 rounding number also as a resistance. But the first one would be to take out that 20 exponential moving average, and there is a gap also that has happened last week on the Friday. So that's what it is. Taking out the 57,000 and 57,629 and 58,000 likewise. That's a major resistance. And supports is the 56,000 rounding number that is also a previous high zones, and that's going to be pretty crucial, as you are seeing the high data also. But there is 50 exponential moving average at 55,937, then 55k rounding number, then 54,555, which is 100 exponential average, then previous lines and all that. You can check out all that levels. It's marked clearly there. Let's move ahead. Now, if we look at the different sectoral indices, the major ones, the 6 of them, we can understand that majority of the sectoral indices have done well. Reality, the FMCG, the pharma, and the metal have done, and sort of sector is flattish, only down. So only the IT sector hit back last week. So last week, sectoral indices have done well, but none of them was ready for bullish bets. It's sideways or slightly bearish. That's what we're seeing. IT is weakest, you can say. So you can very well make out that from these charts. Right? IT index is showing that sideways falling momentum, sideways resisting and falling in the metal, auto having resistance in the median of the parallel channel. Same with the case of sideways resistance in the pharma, and FMCG is trying to go up in the sideways zones, and real estate is having some trouble, but trying to get back in the bull zones. Reality had done well actually. It's a 4% move nearly last week that happened. That's overall sector indices have done one, they're all hanging on the sideways zones. The index heavyweights, the heavyweight stocks, the 6 of them, which um, 7 of them, the critic stocks, they also face some trouble. There is a range shift is there on the HDFC Bank, but huge resistance, and it seems to be at the top of the trend line channel. Volumes are less, that's a trouble, but otherwise it maintains the bullishness more or less. Right? It could slide to sideways, we'll not know, so, but yeah, if it slides down, then maybe another low correction that may happen for the HDFC Bank. Lens is also holding on the momentum in the bull zone, but it could slip down. There is a range shift also there. So if it finds a support here, both the steps and the Lens Bank can have reverse divergence in the momentum perspective, with range shift, and then it can bounce up like anything. ICICI Bank slightly slipped in the sideways last week. It was consolidating at the very close to the all-time high levels, but momentum has slipped in the sideways, which is a concern. Now, what did bad last week was Infosys and TCS. Infosys is okay, it's maintaining the sideways but falling down, but TCS fall into the bear zones and having trouble with respect to the medium term momentum. Kodak Bank, it's a zigzag stock, contrast stocks, or up and down kind of stock, so we can ignore that, but otherwise it's still at the top of that zigzag, you can say. ITC is trying to move, volumes are less, momentum is sideways, so ITC is more sideways. So what is holding the market is HDFC Netherlands and the ICICI Bank. If they slip down, we may have trouble. If one or two of them stays there, then market will move up. That's where the buying happens. Heavyweight stocks. That's how the picture is. If you look at the broader market indices, the mid cap and the small cap, you can see that they have closed green last week, and momentum is absolutely bullish on both, with a range shift, which indicates that if the support is found here, it can break out. Right, so broader market indices are also positive. That's what we have seen. Now, if you look at the institutional participation, 8,000 crores plus of selling once again for the fifth peak of selling by FIs after some small amount of buying that happened last month. Domestics were buying as usual, 9,488 crores. So net longs and derivatives for the 5 years moved on last week. That's what you see there. So FI participation is not coming back, and then market cannot restrict on its own unless FI is coming. Now let's look at the global markets, the global commodities and all that, and currencies, of course. And currencies, if you see in the right side, the dollar index had corrected and fallen below the 100 and maintains it below, but last week was slightly up 0.60%, but it maintains below 100, 98.46. Momentum is bearish, so the dollar index not rising too much is good, but last week was green, which gives an indication that probably it may be heading towards the top of that rectangular pattern. US dollar also is turned to be green, 0.40%, that's above 86. It's not that great, rupee remains very weak. Crude oil is has once again fallen below the 60s, 66. It's near to 63.4. It is good for an oil balling country like ours. And gold is also flattish, consolidating doji is what you see on gold. Whereas gold is consolidating, not ready to move down, not ready to move up, maintaining the bullishness. So gold staying there gives a clue that people are not ready to shift the money from the gold to equity, which is not that great for the stock market, right? So, but that's a hedging instrument. Gold remaining there bullish is a good thing. Now, if you look at the US markets, the Dow Jones, Nasdaq, and S&P 500, we see that it is, all the Dow Jones is close flattish. The momentum bullishness is still there, where S&P 500 and Nasdaq were close green. And remember that they're all very, very close to the all-time highs or at all-time highs. So, US market is green mostly, and having bullish momentum is a good thing because it's a mother market, and that means bullish is good for other emerging markets like ours. That's about the analysis, and we have some actionables. Actionables in sense is for education purposes, not recommendations, so don't make note of that. It's your risk, your money, and your analysis and study and learning. I'm not severe risk, and this is not a stock recommendation at all. Pyramid Enterprises, a pharma stock, and primarily a pharma stock. It's a group stock. Pyramid Enterprises looks like a group, but they have investments in the pharma and many other things. Looks like a panel 7 breakout possibilities there. If it happens, we can take an entry and have tight stop loss to the low of that weekly candle, and it could give one is to RiskReward definitely. Proceed state, real estate is momentum bullish, trend bullish, volumes are good, and pattern is good. Flag breakout and panel channel breakout also, and make an entry for one is to RiskReward. So real estate and pharma, not pharma, yeah, primarily from pyramid enterprises, pharma group company you can say. So two stock picks more on the long side. They're having good volumes, good breakout pattern seen, and momentum and trend both are bullish on the medium term and short term. So that's the reason for the trade. Okay, now for the F&O strategy, actionable. Again, not recommendations. Basically, it's a Batman that we've been taking. I'm taking the Batman because it's strategy is for the weekly, and if you don't take, if you take fully hedged, and if you take other strategies which are not Batman, we don't get much. If you reduce the risk and if you are on a wider range, we tend to get very less profit. So this is the only strategy that seems to be working on the weekly short term. If you take it on Monday, where we have just 4 days for the expiry, ideally you should exit before the last of the expiry. So still gives a reasonable probability of profit in very good range, and then you can manage to get 1% or something. Yeah. The range that we have is 24,300 and 25,500. So that's what I expect. It's less than a 2 standard deviation, but definitely very closer to that. So that's the best we can do. And the other way, it's not completely hedged. It's Batman strategy where we're selling OTMs and we're buying inside hedge OTMs also to hedge that. But outer wing complete hedging is not there. If you want, you can take that, but then top profit will be peanuts. Right, so it's Batman strategy where we are selling 25,400 and 24,400 call and put, double the quantity of what you buy at 25,350 and 24,450 puts inside hedges. Right. Exit if this wide range is breaching either side, just exit. That's the only strategy. Take a loss and then play for the next week. That's the only strategy. And let's wrap it up now. The market seems to be sliding down slowly from the highs, and now is at a support zone. The bulls could expect for some kind of bounce to happen, because this correction is after a big recovery of nearly 17% Nifty. And during that process of correction for last week, it has lost its momentum and the trend, and FIs continue to be sellers. And remember, we are having a correction. We just completed a correction of 17.3% and 12% on the Banknifty. So we went to 3 on the Nifty. And remember, we had a 2 year 70% of rally that we had seen, and that since last 2.5 years. So these are all including small corrections that may be coming in. Market may be heading or preparing itself for the next leg of the rally is what we allow to anticipate given the charts as of now. And we're trying to bucket together the different factors in favor of the bulls and the bears. This week, bulls have got more than last week what it had, and so it's got a bit tough fight. Bulls and bears have equally strong this time. Since let's try to see through that. But it's in favor of the bulls. VIX is low, VIX has been falling, and that shows that the market has less fear. And trend remains very bullish despite all these 3 weeks of correction. Trend in the medium term is bullish, right? And majority of the sector indices have moved up actually, except for the IT last week. And there is this CIP change in polarity bounce up zone. We're already seeing that in the technical analysis, and there's a possibility that market can consolidate from here. And if you use markets are more or less green, it's near the all-time highs, and border markets indices also seems bullish across green actually, and they are very at the very top, very close to the all-time highs with bullish momentum. Crude oil remains below. Dollar also is still below the 100. A lot of good factors that's in favor of the bulls. And what's in favor of the bears is indices below the 20 exponential moving average. In the short term, it's bearish. Open interest For the options and the futures, they are bearish. FIs ended up sellers for consecutive for several weeks now, and the momentum fell to the sideways. Short term, it is sideways momentum. And also, cost of the bears also on the short term. So, as you know, both bands are bearish biased. Heavyweight stocks are sideways over there. They're struggling the sideways, you can say. Right? Those are the factors in favor of the bear. So, anything could happen next week. No? There's no clear indication there, but my call for the next week is my bearish bias based on what I understood. Your views may change. So volatility could come in because Trump tariff war continues to be happening here and there. So market volatility can be expected. All what now seems to be remaining the bullish despite a small correction is entering that is happening. So keep one thing in mind that technical charts can go for toss if there is black swan events like pandemics and recessions and inflations and interest rates and tax war and all this happens. No? Technical charts may not hold good in the very short term, medium term it may. But technical charts are just some tools, some mechanism to find where psychologically people are likely to find resistance and supports when they are buying or selling. That's how it is. And for the next week, 24,000 and 25,500 is where the levels are look forward on the Nifty, and 55,000 and 57,500 is what I look forward on the Banknifty. So as long as the market trades above the 26,000 and 57,000, then probably we can assume that it's a continuation of the rally. Until then, you're still consolidating or correcting, right? You're tracing whatever you got, right? So one thing that's in our hand is to manage the risk, manage your portfolio risk as per risk appetite, manage your positions as well, definitely, because risk is all that you got to manage. Capital is all that you have got. If that is gone, you are out of the game. Also check out regular income strategies using the options hedging and all that. But a lot of things are there in the apart from the weekly analysis, a lot of things are there in the playlist. Check out the playlist of the channel. And that's all I have. If you like the content, subscribe, like, share, comment, and do all that. I'm also regularly posting in X. You can subscribe to that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.